Hello everyone, we're going to look at SPY, and this week has been quite an eventful week. The market finally dropped, so in this video we're going to look at what's going on in the markets. So right away we're still looking at Pendragon 321, and from the top you can see the SPY, the symbols right here. Right now these are labeled in Chinese. Give me a few days, hopefully by next video I would change these to English. So basically the one on the right, it says it's a monthly chart, the middle is a weekly chart, on the left is a daily chart. And also if you notice, I have now labeled the prices on the chart. So you'll see the green number 274.84, that matches the green line, and you'll see a little this I guess less than sign or whatever sign, there's a little kind of sideways triangle, so that can tell us, that sign of labeling the prices. Okay, so the green line on the daily chart is 274.84, 271, pink one is 271.53, and purple one is 268.05. Okay, now let's talk about something very interesting. So Thursday and Friday is especially interesting. Thursday was March 7th, okay, and the power line label was 274.84. Okay, so let's go to the 5-minute chart and see why this is very interesting and why this is so important. So right now you guys see it, Thursday, March 7th, 2019, right here. Okay, that's the chart right there. And when the market started trading right on the March 7th, it pretty much opened right here. We're looking at 5-minute chart here now. Everybody see the little tiny circle over here? That's the first 5 minutes bar of the of opening on March 7th, Thursday, 2019. So right away, you guys will notice the market pretty much went straight down for the first half an hour or so. There's pretty much no bounce back at all, and it stopped. It did not stop until it reaches green line, which is 274.84. Okay, remember this number 270.84. 274.84 is exactly what we had labeled right here, the Pendragon 321 on the daily chart, the line, the number is right there. Okay, so at the moment that it reaches that level, the green line, the market pretty much just trading range for a little while. It tried to bounce off that, okay, and it went up a little bit during the middle of the day, and toward the end it went down again. Okay, and when by the time it closed, it still closed very close to that green line, 274.84. In fact, on Thursday, the closing price for SPY, it closed at 275.09, and versus our 274.84, it's only off by, let's see, only off by 0.25. So as mentioned before, these lines act as magnets. They attract price to them. That's why they are so useful, because they can help us predict where the market most likely to go or not. Okay, now let's look at Friday. Friday is a very interesting case. All right, so on Friday, because on the daily chart we have 3 numbers here, but all we need is two numbers. So 274.84, everybody already know already, right? That's green line, and the one below is 271.53. Okay, so remember these two numbers, 274.84, 271.53. So let's label them right here, 271.53. Basically 274.84, it's the same number as we did on Thursday. Okay, so let's look at examine Friday's price action now, because if you understand what these price lines do, okay, if you understand the significance of it, it's really going to help your trading tremendously. Okay, so again on Friday, here's where that's where the market opened, right here. Everybody sees circle. Let me put a label right here. Let's label B. That's where the market opened on Friday, March 8th. Okay, that's where the market opened, around that place. Right away, if you notice, it's actually, okay, where I drew the little line right here. It's right in between the upper boundary of 274.84 and 271.53. Okay, and what did I mention before? These things acted as magnets. Whereas on Thursday, back here, there was really no line up there, right? Everybody go back here. There was no line on top. So this one line right here, the green one, acts like a strong magnet, attracted the price going downward. Now on Friday, now we had 2 lines. Now it opened right in between. So both lines, the one on the top, which is 274.84, and the one on the bottom, 271.53, they are both exerting their influences on the price. Okay, as a result, look what happened. The market pretty much is in a battle, 6-0 battle, up and down for a big chunk of the day. Everybody see that? And if you get shorted it, and you see, if you hold a short position coming into Friday, and if you know this, if you have this knowledge ahead of time, and you know how to read this, the price level, these are the power of the price levels. You can just close out your short position first, take some profit, and see how the market react later on. See, the market went up there during the first part of the day from B, and then it went down, even though it penetrated below that opening price for a little bit, but it kind of held, and all the way here. And look at this bar. It wasn't until right here, about 2:20 in the afternoon on Friday, okay, where my cross is right here, 2:20 on Friday. Okay, let me put a little bar right here. That the market started to go up. I mean, so, and what the market did is that it had risen all the way toward the end of the trading day. It's being attracted by the line right up here. This proved to be a stronger line right up here, 274.84. Okay, in fact, the market closed at 274.53. That's only 0.31 lower than our predicted price. Okay, so that's the magic of knowing the price level. Now let's go back to these 3-to-1 charts. So if we look at before the monthly, we already mentioned in the previous video. On the monthly chart, we have a going long signal, and that is still in effect. Okay, on the monthly chart. Okay, so not much has changed. So if on a monthly perspective, this market is still going long. But on the weekly, on the chart, we now have this confirmed pink dot. So, the point, well, let's call it point B then. It's a confirmed short signal. Okay, but you couldn't quite reach 271.80. So that's something we need to look at a longer time frame. Before we just explain the daily, now we're looking at a weekly. Okay, so that's where we are right now. And if it does not reach 271.80, okay, and it bounce, because right now look at it, on the monthly chart we have a confirmed long signal. So that means the long side, the upper trend has the upside has the has a dominant influence on the monthly chart. And on the daily chart, we also have a blue cross that also confirm the dominance of the long side, the going uptrend. So 2 out of 3, it's going long. So if the market cannot, it's very likely the market is this latest, let's call it retracement. Okay, at this point, I'd rather call it retracement rather than the beginning of another leg going down. Okay, not another, instead of another leg going downwards. So that's what we have from SPY. Okay, everybody see that? Now let's go back to the monthly chart. I mean the weekly chart, 5-minute chart right here. Another interesting thing is here. A lot of time, people derive these, I call them pressure points. Okay, these important numbers like these green line. They can use volume analysis. Okay, volume analysis is not so bad. Because a lot of time, which is true, it's a market truth that when the market reaches a certain price, they'll trade a lot of volume over there, and those prices are usually your pressure points. They can act either as support or resistance. Okay, so let's compare them to what our Pendragon 3-to-1 system is. So on the left chart, you will see this. This is a market profile. These are basically volume-based price charts. So you'll see kind of like a sideways pyramid. Okay, so each price, let's put it right here. Everybody see where my crosshair is on the left? Okay, so that's say right here. Let me put a number. Let me put a letter, see if I could. Here we go. Letter A right here. If you look at the left side right here, okay, where my arrow is, there's a lot of boxes going to the right. So that means around that price level, which is around the price of 277.77-ish, okay, there's a lot of volume being transacted there. So that is a possible support and resistance, because that's the level that tend to attract the price. Now, these are pretty good. However, the problem is that they are basically lacking indicators, because look at point A right here. That's pretty much this chart right here. We're looking at daily chart here, okay? Because by the time you form this thing, the entire day is over. You only give us indication for the next day. Okay, it doesn't do much. It doesn't help us much when we're trading it today. Okay, so the next day, on Thursday, okay, this box right here, this box that I'm gonna put a circle right here. You will not know all this price action until Thursday thing is over. So it doesn't guide us as far as Thursday's price action goes. However, if we know 274.84, right? These are two numbers that we copy from the previous, the number on the right. See, 274.84, 271.53. The price got attracted to it. So now we can know this is a significant price pressure point. Using algorithm to calculate this has a much more forward-looking property and usefulness rather than the volume, which is a lagging indicator, right? And on Friday, right here, everybody see that? The price basically fluctuates between 274.84, 271.53. At the end of the day, no surprise there. Point B, after a whole day of trading, at the end of the Friday, yeah, lo and behold, the one right in the middle, that is the highest one. Okay, but if we know the price line coming in here, we can see that, majority of the time it was an action, it was indecisive. Only toward the very end, the market went up. This market profile doesn't tell you where the market is going to go. It can't really provide the much explanation or the rationale behind the market move. Whereas these Pendragon 3-1, these price lines, they could. All right. So that's the explanation for SPY. And right now, let's go briefly to gold market. Let's do a quick update on the gold market. So let me just make these numbers easier to read. So the cyan number is actually the longer term, the purple one, because for some reason I couldn't find the purple number. It doesn't matter. So you're trying to coordinate it. So on the monthly chart, I think I mentioned this in previous video. We already have a confirmed short signal on gold. Okay. So on the monthly chart, it's close to the downside. Okay. And on the weekly, right now it's trading between these two numbers. Okay. And on the daily chart, right now, we do have short term, a confirmed long signal. This blue dot right here. So the market is going up. So it already sliced above 1293.96. The next number you might want to challenge is 1308.11 or 1309-ish level or 1308. Okay, I'm just going to separate these out. Everybody see how the calculation, they'll somehow converge around this number, this range. I can't really, okay, label. Just do partial labeling. Everybody can see it. Okay. These three numbers are fairly close. So on the lower end, you have 1308.11. On the higher end is 1309.39. That's your next level of significant resistance for gold price. Okay. Now, so let's do a quick update on crude oil as well. These are the numbers for crude oil. Okay. Again, number 59, 59.98, 59.02 is quite a significant upside resistance point. And I remember in the previous video, I mentioned that because crude oil, 2 out of 3 are negative, going downward. You have on the monthly chart, you have a pink cross denoting the beginning of a downtrend. And on the weekly chart, you have a confirmed pink dot. That's a confirmed short sell signal. Okay, so that's why 2 out of 3, this could turn to be quite negative, or at least it's not that easy for the crude oil to go up. Okay, so and that's kind of what happened. Even though it did a several attempt during the week last week, but it could not go above 56.84. That's a resistance, and the market went down. Even though it did bounce a little bit, so that's the things we need to watch out for. Okay, that's for crude oil. And someone has asked me about UWT and DWT. These are the related crude oil ETF. So I'm just going to display the numbers. The logic is similar to what we saw before. So I'm just going to display the numbers, and you guys take it what you will. See, 1404, 13.96. The two numbers are fairly close, and that's proved to be a strong support right there. Okay, and DWT. All right, that's the inverse crude oil ETF. Okay, these are the numbers, so you guys can look at them. Because once you master, the logic is always going to be the same, always consistent. Once you understand how to apply these, the rules are pretty simple and straightforward. All I have to do is give you these sets of pressure numbers, okay, and then you can know what to do. But a lot of time, price levels are more important than merely price directions, because price direction can change on a dime. But these price pressure points, they are more, they have longer longevity in the markets. And usually, oftentimes, I found it's what the markets do when they reach these price points. Okay, how they react. Do they go above? Do they hold? Do they not? And do they just like do a basically churning around that? The behavior that tells us much more regarding where the market is gonna go. And after all, don't forget though, when we go long or go short, what are we buying? We're not buying up or down. We're not buying directions. Okay, we are actually buying price levels, right? When you get in, let's say when you long at $100, you got long at 100. True, yeah, you got long, and subsequently the price, anytime price is above the price that you got long at, you made money. If you long at 100, and if you got out, above 100, you made money. And if you went below that, you lost money. And the market, we all know it fluctuates. So it's very hard for me to give you a specific direction, because we all know it depends on your time frame, what your focus is. The market could just turn on a dime, or have up and down many times, right? Okay, so that's DWT, EWT, and let's look at SOX index. Someone has asked me about that too. SOX index, the logic is very similar to SPY. Okay, as far as the the signal goes. So I'll just label out to show you guys the price levels. So since this is a video, you can always pause the video and to examine the price levels more closely. Okay, so I'm not going to waste any more time explaining it. Finally, somebody also asked me about TNA, so let's do them all here. TNA. Okay, let me make the numbers easier to read. Okay, because when they're very close to each other, they tend to bunch up together, as in this case. But when they bunch up together, shows a very strong level of support resistance. Okay. All right, so that pretty much concludes this week's presentation. I know we went through a lot of product, and if you have any more questions, I didn't really go to detail a lot of it. So if you guys want me to go into more detailed explanations, please leave comments, let me know. And I strongly suggest you subscribe, encourage me. And also, if you'd like to reach me by email, my email for Pendragon for this channel is right here. PANLONG321@outlook.com. All right, that concludes this week's video, and I'll see you guys next time. Thank you and take care. Bye bye.